Hey, good morning, everyone. Good morning, Trade Pros and YouTube. We have yet another jam-packed news day today. Yesterday, we had the CPI data that came out pre-market. To everyone's shock, remember what we talked about yesterday into the end of the session, this YouTube session, that we had this massive rally in the overall S&P 500 futures, right? We rallied up to like 41.80, 70, something like that. We rallied about 100 points from the news event itself with some actual pre-anticipated buying that happened right before the event actually came out. So someone knew something that they acted on, maybe they shouldn't have. So we'll see how the SEC deals with that. But there's a lot of things that the SEC is dealing with. I'm not going to get into it too much right now, but we have another news event, the CPI data yesterday. Remember what we talked about? We talked about 41.52 being a huge pivotal level where I'm looking to open up those shorts, and that marked pretty much the pre-market right before the open highs until we bled out through the rest of the session. So I'm going to give you a few more levels today into the end of the day, but we have also the Fed announcement today. That's the other news event. So jam-packed week of news. And this morning, just like every other Fed day, I am anticipating to see slower price movement, slower action in the overall market to see how things kind of shape up here. Now, everyone's going to be waiting for the Fed. I don't think there's going to be that many traders, investors, scalpers, whatever the case may be, getting too active until the Fed comes out at 2 p.m. today, 2 p.m. Eastern time, and announces what we're expecting, 80% chance of a 50 basis point hike. Now, if anything deviates from that, if we get a 25 basis point hike, for example, the market's going to rocket to the upside, right? If we get a 75 basis point hike, which is a 20% chance currently as it stands, we're going to get a pretty strong drawdown. But the expectation usually holds pretty true. 80% chance of a 50 basis point hike. That's probably what's going to happen. Now, leading into that, I'm not going to be too active in the morning session, but we have to take a look at what the Fed says because they're going to unveil a lot of things forthcoming for the next year. So it's here. The Fed day has arrived. Investor economists have all set their alarms for 2 p.m. Eastern time when the central bank will detail its latest rate decision, right? So 2 p.m., we get the rate decision. 2:30, Jerome Powell gets on the wire and he takes the podium talking about economic projections, the interest rate update, inflation, all that stuff, taking also a Q&A, which will largely define trading behavior and sentiment as the market heads into 2023. So this is pretty much going to set up the next few weeks for us and also give us an insight on what's to happen in the first few weeks of the new year. So the time for moderating the pace of rate increases may come as soon as the December meeting. Remember, Powell said that in his last media appearance, and now it's looking like a reality. So out of 100 responses from the Wall Street breakfast survey received following yesterday's softer CPI print, 95% of them predicted a 50 basis point hike, and only 5% believe that the Fed is still going to go for a 75 basis point hike. So it's a notable change from a day earlier. Prior to that latest inflation figure, about 2/3 of the 2,100 survey participants felt that the central bank was set to announce a half a point increase compared to 1/3 that saw a 75 basis point increase. So all in all, the Fed has cranked up its key rate by 3.75%. 3.75% percentage points in the last year from a near zero that stayed in place between 2020 and 2021. So the key rate, formerly known as the federal funds rate, is closely watched because it influences the interest rates throughout the economy. For consumers, rising interest rates makes it more expensive to take out mortgages, for example, which we've seen all-time highs in the 30-year mortgage in the U.S. this year alone. Carrying a balance on the credit card gets more expensive, and to get a car loan gets more expensive. For businesses, it increases the cost of banking loans and for raising capital in the debt markets. So following a 50 basis point hike today, a head investment strategist at Halford Trust sees a 25 basis point increase in February a possibility and another quarter point hike in March. Then we're going to have to pause to allow to see the lag effects of this tightening monetary policy play out. So it's not this viewpoint from this investment strategist isn't necessarily a rarity in this market. I think that they are going to look to probably slow down the rate hikes because they've hiked so aggressively. We're going to be, by the end of the year, if we get a 50 basis point hike, we're going to be in the range between 425 and 450, and that's pretty high, right? If we continue to hike, if we have another point next year, right, regardless of regardless of when it comes, if there's another point before they start leveling out or start actually cutting rates, we're going to be near 6%, which is a rate that we haven't seen in a very, very long time. So there's always a lag to these things, right? Mortgages, because new mortgages, when they start funneling in, you're going to see them funnel in at a higher rate. You're going to see maybe missed payments on earlier ones, those ones that have floating rate mortgages. You're going to see credit card and consumers get hit by this as well. So there is a lag effect to this that can really put some downside pressure on the economy. So we saw a cooler than expected CPI yesterday, right? We talked about it a little yesterday pre-market, but consumers breathed a sigh of relief as inflation showed further signs of actually subsiding in November. So 3 of the major indices jumped pretty aggressively before falling pretty much throughout the whole day. It seems that the thing with inflation is that you don't have, okay, we have been topping out, but like I said yesterday, it took us 6 months to drop 2%. To get to the Fed's 2% target, it's going to be a very long time before we get from these mid to low 7s down to 5, from 5 to the 2s. So with that really, really heavy inflation, you're still going to see a tightening policy, and you're still going to see quantitative tightening, which is allowing those treasuries to actually mature rather than opening up new treasuries and allowing them to flood cash flow into the market. Rather than selling them off, they're allowed to mature. So we're going to see how that shapes up. In terms of today with the Fed chair, I don't really have any anticipated move. I like these events, they're fairly wild. It's kind of foolish to guess as to where price is supposed to head and what price is supposed to do. I'd rather just wait out and see what the reactivity of the market is based on the information that we get, right? We're going to be in a compressive period probably this morning, which is a sign of no new information coming into the market. And then once we get that new information, you're going to see an expansion to either end, right? Upside or downside, depending on how the market takes us and what Jerome Powell says about the future economic projections. But in terms of some levels to give you guys here this morning, I'm watching the 448 to 450 area. That's going to be a huge pivotal area. It's the bottom of a distribution that held really well throughout yesterday. So anything below that, I'm going to... Jeez. It's very windy here. I don't know if you can hear that, but this thing's making a lot of noise. But anyways, so the 48 to 50, that's going to be a huge pivotal area. Anything below that, we start selling below that, I think there's going to be some decent downside. Yesterday, the area that held extremely well was in and around that 4,025 region, 4,025 to 4,030. Anything below that, I think is going to be a big sell, but I don't necessarily think that we get too much below that area until Jerome Powell comes on the wire. Price, I think, gets pinned between 40.50 and 40.65 ish, right? I think that's a huge area of a lot of actual contracts traded from yesterday. I don't see that price really expands through that area. You can even hazard a guess as to it coming down to the 40.36. That's going to be the downside target on this distribution, but I don't really see us coming out of this range here until about 2 p.m. until Jerome Powell comes on the wire. But anything above 40.65, right, we unleash a pretty strong bullish rally where there's very limited volume into the upside until we start getting into that 40.75 region, 40.80 region where there was a lot of contracts traded yesterday. So with that being said, this morning, not expecting too much, not going to be too active. We're going to see how the Fed shapes up. We're going to trade that live in the futures room with our members, and we'll see you guys there. Check out TradeProAcademy.com. And we'll see you tomorrow. We'll see what the Fed does. We'll do an update on this tomorrow. You'll probably already know. And still, we'll talk about it tomorrow morning. So thank you and take care, everyone. Have a good trading day.